Hello everybody, and thank you for watching this recording. In this lesson, we're going to be going over Chapter 1, Cost and Sales Concepts. If you've taken an accounting course before or work in industry and deal with P&L statements, a lot of this is going to seem familiar to you, or even any basic business course before. We go over some of the basic terms and definitions in terms of costs and sales. Yeah.
Some of our learning objectives with this recording is we're going to be able to define costs and give examples of different kinds of costs and even categorize different cost items as different things. For instance, we'll have fixed, variable, and directly variable costs as well as semi-variable. We'll be able to classify those as either being controllable, non-controllable, a unit, total, or prime cost, and identify whether it is a historical or planned cost. We'll also be able to define sales and give different examples of how we can express sales. And in terms of what we're going to be going over today, we can classify either as either monetary or non-monetary expressions of sales. Okay. We'll be able to describe the significance of cost to sales relationships and identify several cost to sales ratios and formulas used to calculate cost percentages. Cost percentages are actually really important. It's important that we understand them because it's something that's going to be reoccurring over the course of this course. We'll also be able to describe why there are variations in cost percentages between restaurants. So we'll be able to identify industry-wide variations in cost percentages. And lastly, we'll be able to explain the value of comparing current cost percentages or cost to sales ratios with those of a previous period. Here we have some important concepts, very general. Sales is the amount of money that you take in as a result of multiple transactions with your customers or guests. We usually within restaurants, we provide guests with an experience, food, and beverage in exchange for money. The form that this money takes on paper in terms of accounting is sales. Expenses are the costs required to operate the business. There's a saying, it costs money to be in business, or the cost of being a business, and that is expenses. While we will only have maybe one or two different kinds of sales categories, we will have lots of different cost items and cost categories. Finally, we have profit, which is the amount of money left over after you've covered all your costs or your expenses. So it's kind of, as business owners or operators, that's the money that we take home at the end of the day, essentially. It's our sales minus our expenses. Whatever's left over is our profit. If there's a negative amount of profit, that means we've lost money, and that would be considered a net loss. Net income is also used interchangeably with profit. Some more cost concepts. There are four major costs that, as a chef or a manager within a restaurant, that you need to really concern yourself with. The first and foremost is your food cost. Now, this is the cost of any food item that is used in the production or generation of food sales. In most cases, this will make up your largest cost category or even your second largest cost category. It really depends on, the concept that we're talking about, or the restaurant, I guess. These are things that can be directly managed or controlled by management. So as a chef or manager, if our food cost is high, typically we're being looked at as if we're not doing our job properly. Next would be our beverage cost, and that is the cost of any alcoholic beverage or food items if they were used in the generation of beverage sales. For instance, if we're making a gin and tonic, obviously the gin is going to be part of our beverage cost because it is a beverage. But if we're throwing a lime on there, as well as the tonic that's being used to make the gin and tonic, those would typically be considered food items. We would have to include that into our beverage cost because we used that in order to create beverage sales. Therefore, that would be considered a beverage cost. It's not just beer, wine, and liquor. It's also any of the garnishes like lemons, limes, olives, cherries, grenadine, and other non-alcoholic beverages as well. And this is also a rather controllable cost. So again, just like our food cost, if our beverage cost is high, or higher than the standard, I guess I should say, we would be looked at as if we're not doing our job properly because we're leaving some money on the table. Our last two major cost categories are going to be our labor cost. So that's the cost of paying our employees to run our business for us. So that's our employees could be servers, line cooks, sous chefs if they're not salaried. Well, that would be included in labor cost as well. Any dishwashers, hostesses, things like that, or host I should say. Labor cost, given the amount or high wages, this can also be a rather large cost category. If this isn't your largest cost, it would be your second largest. I would have to say that from my experience, food and labor are the highest. Okay. It would also include any taxes or benefit paid to employees, if that's included in their contracts. Lastly are our overhead costs, and that includes all expenses that are not food, beverage, or labor. We can categorize items such as utilities, rent, linen as overhead costs. Typically, overhead costs tend to be fixed costs as well, but we'll get into that later on. So now that we know some of the basic cost categories in hospitality operations, we need to understand how to understand our costs. We also have to understand how to manage and control them. Now, how we do this is we convert our costs into percentages of sales, I guess I would say, and that's so we can establish a standard or a baseline for what our food, labor, and beverage costs should be, and then we can convert what they actually are into percentages and evaluate based on those things. For instance, if my standard food cost is 30% of food sales and my actual food cost percentage for this period is 35, well, I know that I'm 5% too high, or I'm 5% over the standard, whereby leaving some money on the table again. And yeah, we can also use these things to compare to similar restaurants. While you cannot compare to any just any restaurant, say we were talking about a franchise restaurant, so like a Swiss Chalet to a Swiss Chalet, then you could compare percentages to each other to see, you could understand whose is better, whose is worse. Okay, so for the most part in the industry, we use percentages to communicate our costs. Yeah. So now that we know that we use cost percentages to communicate our costs, we're going to show you how to calculate them. Percentages would also be a cost to sales ratio. We can have three different kinds essentially. We can have many, but the ones we go over here, there's only three. We can have our food cost percentage, our beverage cost percentage, or our labor cost percentage. Our food cost percentage is our food cost in dollars divided by our food sales in dollars. I'm just trying to find my pen here. There we go. For some reason, I can't find my stylus, so I'm doing this with my fingers. So I apologize if it's a little messy. So, for instance, if our food cost was $5 and our food sales were $10. Now, I know this is a bad example, but I just want to get the process down for you. Our food cost percentage would be 50%. So 5 divided by 10. Okay, pretty straightforward. In a very similar way, our beverage cost follows the same process. We take our dollar beverage cost, divide it by our beverage sales in dollars, and we'll get our beverage cost percentage. Now, the last one, our labor cost, is a little bit different, only because of the denominator. Our labor cost percentage is our labor cost in dollars divided by our total sales. So you see how that's different between beverage cost and labor cost. Our labor cost, we use total sales, and our beverage cost, we use beverage sales. Okay, so total, and with beverage, we use beverage. Okay. On the bottom here, I have a picture of the costing triangle. We'll use this more in class, but just to give you an idea of how it's used, imagine you see the three pieces of the triangle. There's the top, which is dollar cost, the bottom left-hand side, which is dollar sales, and the right-hand side, which is cost percentage. And then in the middle here, we have a X, that means multiplication. And on this line right here up top, there is a invisible division sign. Now the idea with this costing triangle is that if you know two of the pieces, you can solve for the remaining piece. For instance, if I know my dollar cost and I know my dollar sales, I take my dollar cost, divide it by my dollar sales, and it will equal my cost percentage. Okay. On the other hand, if we knew our dollar sales and our cost percentage, and we were multiply the two, it would give us our dollar cost. Okay, this is actually pretty handy. I mean, in terms of taking a test and things like that, because you just write it down and you can pretty much solve any question that has to do with labor costs, or cost percentages. But also because we're going to be using this in the future, so it's good to get an idea of how to use it now. So we're going to talk a little bit more about percentages. Percentage means out of 100. And there's three different ways to write a percentage. There's common form, and that's denoted by using the That's denoted by using the percent sign, and common form looks like this. So if we were saying 10%, it would look like 10% sign, 10%. In industry, we use this the majority of the time. In fact, I don't think I've ever seen anything other than common form. And for the majority of this course, we'll be using common form, but I have to explain the difference between a few of them just so we can go from different forms to another. We also have fraction form. It's a percentage that's expressed as a part or a portion of 100. So while we say 10% up here, in fraction form, it would be 10 out of 100, which is 10%, 10 out of 100. Even if you were to do that in the calculator, it would come up 10%. We don't really ever use this in industry, but it's important to know that it can be a percentage can be expressed as a fraction. If anybody's coming from high school, I think that this is actually still included in well, it should be in your curriculum, so you would have some experience with this. It's important to go over decimal form, because when we put a percentage calculation into our calculator, the answer that we're going to get back is going to be in decimal form. So if I plug in 5 divided by 10 into my calculator, that was a really bad 0. It's going to give me something like 0.5. Okay, and that would be considered decimal form because there's a decimal, 0, decimal, and then the rest of the percentage. In the example that we're given, 10% would be 0.1. 15% would be 0.15. 20% would be 0.20. Okay, now one thing I'd like to bring up is that in order for us really to express our percentages properly, we have to be able to convert our decimal form percentages into common form. Now, once you've got the hang of this, you probably won't need to use a calculator. You'll automatically know what it is. But if you want to go from decimal form to common form on your calculator, you take the decimal form and you multiply it by 100, and that will give you the common form. So if you were to take 0.5 in your calculator, multiply it by 100, you'd get 50, or 50%. Okay, and then all you have to do is put that percent sign next to it. Important skill to know. Now we're going to go over some various types of costs that are associated with food service business, or actually any business really. First we have fixed costs. Now fixed costs are those that do not change with sales volume. Okay, if I had to give an example, I'd say your rent would be a fixed cost, because no matter how many guests you serve or how many meals you prepare, your rent is always going to stay the same. It's not going to change. So it's fixed. On the other hand, we have variable costs. Variable costs do change with sales volume. So the more guests you serve, if you were to serve more guests, then your variable costs would go up. If you serve less guests, then your variable costs would go down, ideally. Sometimes we don't always see that, and that's where we lose a little bit of money. But an example of a variable cost in my mind would be your food cost, your beverage cost, and your labor cost. As we serve more guests, you're going to incur more costs in those categories. So we serve more guests, we serve them more food. There's going to be more food costs. Okay, so these costs increase or decrease with sales volume. One way to differentiate, or in your mind categorize whether a particular cost is fixed or variable, ask yourself, A, does that cost change? And if it does, ask yourself if it goes up and down in relation or proportion with your variable costs. If it with your sales. If it does, it's a variable cost. If it does not, it is a fixed cost. Now here's a tricky one. Our semi-variable costs. Semi-variable costs are costs that have both a fixed and variable component to them. So a portion of it will be fixed, and other elements will be variable. But there has to be both for it to be a semi-variable cost. One, I guess, personal example I could give you is that with your phone plan, unless you have unlimited, you have a certain amount of talk hours and a certain amount of data for whatever you agreed to per month. So $100 a month to get 4 gigs and however much talk. If you stay within that limit or below that limit, your cost is fixed, $100. But if you go above your usage, then you're going to be paying extra. That would be considered the variable portion of this semi-variable cost. If I was giving a business example or a restaurant example, you could use your total labor, because your total labor includes both hourly employees and salaried people. Salaries don't change. If any of you have a salary, you know that no matter how much you work, you always get paid the same amount. And if you're a chef or a manager, you know that your 50-hour weeks doesn't mean you're getting paid anymore. I know that feeling very, very well. So with our total labor, there's a fixed component, which is our salaries, and then there's a variable component, which is our hourly wages. So the more hours we use, the more our hourly costs go up. So there's both fixed and variable. Here we have some more cost categories, or sorry, cost classifications, I guess you could say. We have controllable costs. Now these are costs that can be controlled in the short term, and examples of these would be your variable costs, because they can be changed or controlled. in the short term. For instance, if we know that we're about to have a blizzard outside, we can logically justify that we should use less labor and we can call people off. Now, by calling people off, we don't incur that cost in our labor, so we can say that we controlled that cost, as it is a controllable cost. So most variable costs actually fall into this category. Next, we have non-controllable costs. These are costs that cannot be changed in the short term and are usually fixed. For instance, our rent, while our rent may change in the future, like within, we usually use leases, not necessarily rent. So a lease contract for most buildings is usually around, I'm talking big corporate restaurants, not necessarily small ones, but we sign 10-year leases. Now, because I signed that 10-year lease, I can't change my rent within that amount of time. So this would be a non-controllable cost because I can't change it in the short term. Okay. We also have unit costs, and these can be food or beverage portions. So when you make a dish, there's a bunch of different portions that go into it. Or even the dish itself, you could consider that particular dish, the cost of that dish, you could even consider that a unit cost. We also have total costs. Total costs would be the cost, but there's a few of them actually. We have total cost of goods sold, which includes your beverage cost and your food cost, and sometimes labor. You have your total labor cost, which is your salary, your cost of your salaries plus the cost of your hourly wages added together. And then if we're talking about total controllables, total non-controllables, it's just the sum of all those costs in the category added up. That was a big mouthful. Don't worry about it. I'll show you on the income statement when we go over it. The last few types of costs, we have our prime or raw cost. This is the sum of your food, labor, and beverage costs plus employee benefits added together. Okay. We don't talk about this too much in this course. I think the only time we talk about it is I think CVP, but it's important to know. We also have historical costs. Now these are costs, or any costs, that we've had in the past. So you would find these in previous reports, previous income statements, cash flows, balance sheets, things like that. We also have planned costs, and these are kind of the opposite of historical costs. These are projections of what our costs are going to be in the future. So where we could find these would be on a pro forma, on a projection sheet, places like that. So these are our planned costs are just projections of what we believe our costs are going to be in the future. Now we're going to get into different expressions of sales, and the first of which is monetary expressions of sales. Monetary terms always take or include some sort of dollar value. So when we're talking about monetary, we're talking about money. Think about this as how you're communicating to somebody else about your sales. When we're using monetary expressions of sales, we're telling them about our sales in money. So that you can give them your total sales, you can give them your total dollar sales by category, so food, beverage. You can tell them your average sale per server or your average sale per seat, your average guest check or your average table sale or your average sales per server. All of these, because they are they're being communicated in the form of money, are going to be considered monetary expressions of sales. We're not going to spend too much time on it for the purposes of this video, but we will definitely be going over it in class because it's important to know how to use or calculate these items, but also use them because we can use them in different scenarios as well. Next, we have non-monetary expressions of sales. So this is communicating your sales to somebody else using anything other than numbers. Okay, you can use the total number of something sold, so the numbers of steak or salads sold in one day. You can tell somebody that on Friday night I sold 200 covers, or for the week I sold a total covers of 9,000. Okay, you can also tell people that your seats turned over 5 times during Friday dinner. Okay, your seat turnover is just the number of seats that were occupied during a particular service period, and then divided by the total number of seats. It tells you how many times each seat was sat and cleaned and then resat over a certain period. You can also tell people about your sales mix, and that gives an idea of how many of each menu item that you sold. Okay. Again, we'll be going over this more in class about being able to calculate seat turnover and things like that. And now we've come to the income statement. The income statement is a snapshot of a business in financial light, showing how profitable the business or even how efficient the business is with respect to its costs. Again, it's a snapshot of a given period of time. So this could be a week, this could be a day, if you really wanted to get that nitty-gritty, or a month or a year. Most businesses are required to publish their earnings, or most public companies are required to post their income statements or their statements of earnings once every quarter, and then do a year end and have that audited by a financial expert. Okay. Easy way of thinking about the income statement. Income statement shows how much sales we had, what our costs were, and what our profit is, and how much money we made. This, as you see in front of you, is a very, very simplified income statement. Sometimes income statements can be multiple pages. Actually, most of them are. When you don't get the consolidated versions, you get the super crazy ones that they get especially nasty when there's different brands under one corporation or different product lines for different manufacturing businesses, and it can kind of hurt your brain to look at. But this one's really nice. First, we have our revenue right here. So this is our sales, and for some reason I can't bring up the pen. There we go. We have our revenue. Okay. Our revenue is 100% of our revenue. We would then subtract our food and beverage cost. We could find the beverage cost percentage, or the food and beverage cost percentage as well, because we know our revenue. We'll do this more in class. We would then subtract our labor cost, subtract our total overhead costs, and that would equal our profit. Remember, if we went back to one of the beginning slides, if we take our sales minus our costs or expenses, it gives us our profit, or our money. We like money. We love to make money. This should always be a positive number. If you are to operate a profitable business, your costs will always be less than 100% of your sales. And that will give you a net income or a net profit, and not a loss. Here we see another simplified profit and loss, and we've just assigned some numbers here. So our sales were $1,059,772. Because it's our sales are, well, first of all, I should explain. The percentages here, the percentages on the right-hand side are percentages of sales. So our sales divided by our sales would equal 100%. Okay. Our food cost for the period was $349,725. If we take our food cost divided by our food sales, we would get 33%. Next, we have our labor cost of $307,334.05. If we were to divide that by total sales, we would get 29% of sales. Next, we have our overhead, which was $328,529, or 32% of sales. If we take our sales, multiply our food cost, our labor cost, our overhead costs, it would equal our profit. And in this case, our profit was $74,184.09. Now, is this good? Well, if this was for a week, $74,000 in profit is a very good thing to have. If it's a month, it's also pretty good. Which means that our profit was 7% of our sales. That's pretty good. In restaurants, you see an EBITDA or a profit or a net income number. That's actually pretty low. It's usually, from what I've seen, around, after all costs are covered, around 5%. In fact, in the industry, we have the 30-30-30 rule, which means that our food cost should be 30%. This is just a baseline standard. It's not the same for every organization. But our food cost would be 30%, our labor cost would be 30%, our beverage would be 30%, leaving 10% of our sales to cover our overhead and provide for a profit. So 10% is not a whole lot in order to cover those two items, so our profit percentages are usually pretty low. So again, around 5% or so. Here we have some key terms over the course of the chapter. Some of them we've already gone over. Some of them we'll be talking to in class. You'll notice down here I have the practice income statement on the bottom left. I will be posting another video about how to complete our income statement worksheet. Very important. I'm not sure if our class is in a computer lab or not, but it's an Excel spreadsheet. If we have to do them by hand, then so be it. But it's good practice for you. And being able to read these income statements is a huge skill that a lot of chefs or managers really don't have down very well, especially when they're starting out. So starting this right now is a great thing to have. Okay? Thanks for watching this video. See you in class.